All right, let's dive right in. Welcome to today's Explainer, where we're tracking an absolutely massive shift in global capital. The big flashy headline you're seeing today is that the KSPI, South Korea's benchmark stock index, closed up 1.43%. But we aren't here for the basic headlines, right? We're here to uncover the hidden tactical moves happening right beneath the surface. And today, the broader supply chain is screaming a very specific signal at us. A massive capital rotation has officially been confirmed.
Here is the bottom line right up front. That super healthy-looking Asian index number, it's kind of a mask. It's hiding what's really going on. The actual signal we need to focus on right now is an aggressive, under-the-radar rotation. We are watching smart money completely pivot away from pure AI chips, and they're taking that cash and flooding it directly into US-bound nuclear and power infrastructure. It's a total sea change.
$4.95 billion. Let that number sink in for a second. That is the sheer volume of foreign net selling in Korean equities that we saw in just a single session. Look, when nearly $5 billion packs its bags and leaves a market that quickly, it is definitely not random market noise. That is a highly calculated move by major institutional players. But to really figure out where all that cash went, we first need to look at the catalyst that kicked this whole thing off.
So let's look at the baseline action. The KOSPI composite rallied basically because the Asian session was actively pricing in a major geopolitical de-escalation. Specifically, we're talking about progress in US-Iran ceasefire negotiations. This progress lifted a really heavy layer of global uncertainty. Suddenly, the near future looked just a bit less risky. That fundamentally drove the Asian indices up, because investors were suddenly way more willing to pay a premium for future earnings, now that the immediate threat of conflict had dialed back. Basically, the broader market breathed a huge sigh of relief.
Now, here is where the divergence gets incredibly fascinating. Remember that $4.95 billion of selling we just talked about? Well, almost 3/4 of it came from dumping positions in Samsung Electronics and SK Hynix. Those are the absolute giants of the AI semiconductor boom. But, and this is crucial, that money didn't just go sit in a cash account somewhere. Those exact same foreign participants took that capital and simultaneously flooded it into power infrastructure, aggressively buying up companies like Doosan Enerbility.
Let's break down exactly where that smart money landed, because we're seeing some major foundational plays lighting up across the board. We tracked a whopping $940 million net buy straight into Doosan Enerbility, specifically targeting their nuclear power projects. Then another $520 million poured into Taihan Fiber Optics, which targets North American data center buildouts. And another $308 million went right into Sojin's system for U.S. power grid modules. Guys, this isn't a coincidence. It is a deliberate, highly targeted repositioning meant to capture upcoming infrastructure demand in both the U.S. and the Middle East.
To understand why this massive rotation is happening today of all days, we really have to look at the two parallel channels this ceasefire catalyst triggered. First, you've got the direct risk premium channel. That's the literal market relief from removing the uncertainty of war. And second, you have the financial conditions channel. Brent crude oil just tumbled 8.6%, which instantly cooled down inflation expectations and dragged bond yields down with it. These two channels essentially work together in perfect harmony to create a totally synchronized equity rally across Asia. You can actually see this perfectly in the sharp drop in the Korea 10-year bond yield. It completely captures those cooling inflation expectations. But honestly, here is the most fascinating detail of all. Federal funds futures and overnight rate expectations haven't moved a single basis point. Zero. The Federal Reserve's math hasn't changed at all. So what does that tell us? It tells us we're dealing purely with a geopolitical relief rally, rather than some fundamental shift in global interest rate expectations. Which brings us to a massive, glaring contradiction in this session. There's an old trading floor saying that's playing out literally right now. The supply chain says bull, but the gold and VIX say bear, and that conflict decides the open. Think about it. If geopolitical risk was truly and completely resolved, gold and Wall Street's fear gauge, the VIX, absolutely should have dropped. But they didn't. Gold rose 0.92%, and the VIX ticked up 0.58% right alongside this equity rally. The market is happily buying the upside, sure, but it's heavily hedging against those ceasefire negotiations falling apart. So how exactly do we handle this unresolved tension? We shift gears into a strategy known as the Canary Protocol. We absolutely aren't going to rely on the broad, noisy market indices today because, as we've seen, they're just masking what's actually happening underneath. Instead, we're going to rely strictly on those physical supply chain targets we just mapped out to guide our entire execution strategy today. This brings us to our core, unbreakable rule for today's setup.
Do not trade the headline. Trade the supply chain. The mainstream news is going to be obsessing over the KOSPI being up or splashing ceasefire headlines across the front page, but our strategy, it relies entirely on ignoring all of that noise and watching exactly how those specific infrastructure and power grid stocks behave the moment the U.S. market opens.
Okay, let's break down the exact execution levels. If you're tracking the Semiconductor ETF, ticker SOXX, your core pivot is NASDAQ 100 futures at 28,500. Now, because of that really clear fatigue signal from the massive Asian sell-off in Samsung and Hynix, you only want to enter at half size if jobless claims come in low. On the flip side, for U.S. energy giants like Constellation Energy Group or Vistra, that's CEG and VST, your pivot is the prior close plus 0.5% intraday. If that ceasefire is officially confirmed, well, that's your green light to increase your weight in those infrastructure assets.
Keep it emotionless today, folks. Here are your 3 strict decision boxes for the session. Step 1, entry. You go long above resistance only, and I mean only if we get that specific 205K jobless claims print. Step 2, exit. You liquidate those positions if we break below support or if there's any confirmed breakdown in the Iran negotiations. And step 3, invalidate. If the market is just chopping sideways in a really tight range, you do nothing. Remember, sitting comfortably in cash is a perfectly valid position. And as always, if the VIX fear gauge spikes over 20, you switch immediately to capital preservation mode. Now, we have to visualize the primary macroeconomic hurdle we're facing tonight. At 8:30 a.m. Eastern, we get the U.S. initial jobless claims. A print of 205K or below, that is our catalyst. It signals a highly resilient labor market, which fundamentally favors our infrastructure targets. But you've got to beware the trap. A print above 220K, especially if it happens while the VIX expands over 20, means the whole plan has failed and requires immediate liquidation. Right before the opening bell rings, you need to run one final check. Keep a close eye on the pre-market volume on those energy plays, CEG and VST. You absolutely have to confirm that the U.S. price action is structurally aligning with that massive wave of foreign buying we saw in Dosan Enerbility over in Asia. If the U.S. volume doesn't back up the thesis, you hold your fire and you wait for a clearer signal. And that wraps up today's briefing. The setup is precise, the capital rotation is confirmed, and your triggers are set. Make sure to log the result at 0730 Eastern, but all of this leaves us with a pretty massive question to ponder today. If the absolute smartest money in the room is already cashing out of the AI semiconductor boom just to buy the physical power grids that run them, are we nearing the end of the AI hype cycle, or are we just entering its most expensive, highly physical phase? Think about that as the market opens. I'll catch you in the next explainer.